Hey, good afternoon, everybody. This is Scott with Credit Suite here to go over and talk to you about a little bit about equipment financing and leasing and how it could benefit your company and preserve your current existing lines that you have out there today. So to begin, what we want to talk about is, does your business need equipment? Some of it can be extremely expensive. For new businesses in particular, there's a lot of things going on. There's a lot of bills, a lot of expenses that businesses have to get through, and then plus they have to buy their equipment to make money. It can almost feel like an impossible dream for you. But you need that equipment to make money, as I said. And how do you make it past this frustrating catch-22? You do it with equipment financing and leasing. So I'll show you the A to Z on how you could get funded while preserving your existing capital. What is equipment financing? Equipment financing is when you use a loan or a lease to purchase or borrow hard assets for your business. Basically, it's a collateral loan. It's a secured loan. It's a business finance option that you can use to buy or lease any physical asset. So examples of that would be as if you're in a restaurant and you wanted to buy an oven or a company car, or if you own a landscaping business and you wanted to buy a lawnmower. These types of equipment purchases would be available to you, and that doesn't include office supplies as well, fax machines, printers, etc. Why do companies use equipment and financing leasing? A recent Equipment Leasing and Finance Association survey found that 80% of American businesses lease a portion of their equipment. The list of these companies leasing ranges from Fortune 500 companies to mom and pop stores out there. So it's a perfectly practical way of getting the capital that you need and the equipment at the same time. You'll have predictable amounts every month that you'll be paying, just like a car payment. And one of the key factors to building business is building your business credit well while you have that equipment lease out. Having business credit this day and age is, you have to have it. It's almost, every bank and financial institution wants to see how your business is trending. So when you do an equipment lease, you will that will report back to the business credit. It's great collateral. As we said, the lender probably won't want any other collateral other than what you're financing or leasing. What are some of the advantages of equipment financing and leasing? You will often put down less money than you would if you were to buying the piece of equipment outright. You may be able to negotiate flexible terms, something that could fit your bank account a little bit better than other terms that you have out there today. It's easy to upgrade after your lease ends. You always have the opportunity to purchase another new piece of equipment or buy the equipment that you leased outright. This is helpful as your equipment is something like a computer, which can quickly become obsolete. Everybody knows that, upgrading to a computer every couple of years now. What are some of the disadvantages of equipment financing and leasing? You may have to pay a large down payment. That's kind of subjective. It just depends where you are in terms of how old your business is, what currently your business bank statements look like. There's a number of things that go into it. There are doc fees as well when you do lease or finance equipment. You also need to have good personal credit. I wouldn't say great. I think typically we can work with companies that have a 550 credit score. So to me, I mean, that's that. I think the American average, or the average in the United States, is about 680 when lenders are looking at you. If you finance the equipment that becomes outdated, your business is stuck with it until the end of the lease or loan. So it's kind of a negative drawback. But look, typically you're only looking at a 2.5-year loan when you're leasing equipment. Continuing on with some of the disadvantages, leases can often end up costing more than purchasing. I mean, that's kind of like that with anything. Like you lease an automobile, and after 3 years they start charging you 3 cents to 5 cents per mile that you go on, but you get the benefit of having a brand new car and being able to trade it in for a new one after 3 years. you'll need a new lease to make or make some other arrangement at the end of it. Again, it's a situation where you could look at buying the vehicle outright, or releasing a new vehicle, or going a different direction. Buying a piece of equipment means it's yours to keep or to sell. So that's one of the things, when you buy it outright. What you need to know about equipment leasing and financing is, what equipment do you need and for how long? So when you're going to a lender, you want to have a list made up. You want to have something in your mind, especially as a startup, what you're going to need for the long run. I mean, if you're opening up a restaurant, or are you going to need some sort of back office software? Are you going to need vacuum cleaners? I mean, all these things you got to create a list, because you want to tell the lender exactly what you're looking for when it comes to leasing out equipment. Do you want to bundle services, supplies, training, and equipment, lease it into one contract? You certainly have the ability to do that. Have you anticipated your company's future needs so you get adequate equipment? That's super important. I mean, a lot of times when people go out and they're looking to finance or lease equipment, they don't get enough, and they max themselves out on the best product that they have, but they didn't figure out, well, I need to get a fax machine too, and oh my God, I need to get a new computer, and my back office system is slow. So anticipate what your company is going to need and the future needs of it. And what's the total payment going to cost? I mean, of course, you're going to go in there with a budget, but you want to know exactly what the payment arrangements are before you sign on the dotted line. And the important thing is you got to know who you'll be dealing with. Typically, in a lease or finance situation for equipment, there's three parties. There's going to be you, the business, the seller, and the lender. So those are the three people that are going to be involved in leasing out the equipment. Is there a separate company financing the lease? How long has the company been in business? Do your research. Find out how long this company has been around. Look at the reviews on them. Do you understand the terms and the conditions during the end of the lease? So that's extremely important, because these things can kind of throw you for a loop. I mean, if you have damaged leasing good, something that damaged equipment that you've purchased or leased out, and you want to find out if there's a clause in there, if that purchase or that lease was damaged, what do you have to pay out as a business? Is casualty insurance required to cover the damage to equipment included? These are all important things that you need to write down before you jump into financing or leasing equipment. Who pays the personal property tax? That's a really good question to ask the lender going into it. You want to make sure, again, if there's damage done to the property, who's going to be responsible for the insurance on that? What are the options regarding upgrading and trading in equipment before the lease period ends? Great question. Some companies may allow you to trade up within a year. Others may say you have to finalize the contract till after 2.5 years. Who is responsible for repairs? Most likely, 90% of the time, it's going to be you as the business owner that's going to be responsible for the repairs. But sometimes there are options in the contract where you can buy extended warranty. Fair market value lease. With fair market value lease, you make regular payments while borrowing the equipment for a set term. When the term is up, you have the option to return the equipment or purchase it at fair market value. To put a kind of an equivalent to that, again, you're looking at, like, if you leased a car out and then after 3 years you went back to trade in that car or upgrade to a different car, you're going to receive the Kelley Blue Book value or the Black Book value of that particular car. In leasing equipment, they're looking at the fair market value of the product that you leased out. The $1 buyout lease. This is a type of capital lease. You pay off the cost of the equipment plus the interest over the course of the lease, and in the end, you owe exactly $1. excuse me, once you pay the $1 residual, sorry about that, I had a little glitch with the system there. Once you pay the $1 residual, which is essentially a formality, you'll fully own the equipment outright. This type of lease is very similar to a loan in terms of the structure and cost. There's the 10% option lease. This lease is the same as a dollar lease, but at the end of the term, you have the option to buy the equipment for 10% of its costs. These tend to have a lower monthly payments than the dollar buyout lease. How much can a lease cost? Let's say you're leasing about a $25,000 piece of equipment. Let's call it a 10% option, and then a 36-month term, 3 years. The value of the equipment is $25,000. The interest rate on that equipment is 15%. The term length is 36 months. The monthly payment would be approximately $780. So the total cost to lease that product is going to be $28,079. The cost to purchase is going to be about $2,500. So the total cost of the equipment at the end of it is $30,579. With the example, you would be paying an extra $5,579 over the course of the lease. That's over 1/5 more added to the total cost of the equipment. But do understand that you are loosening up any capital that you have in the bank now, any personal lines of credit that you can utilize for day-to-day operations of your business. By leasing, you won't need to use those funds. If you bought the equipment from the start, you would pay $25,000. So you would be $25,000 in the hole straight from the beginning. So exactly what I'm saying. So, equipment can be very expensive. I think personally, the leasing option is a great way to go. Like I said, 80% of businesses use the leasing option because they don't want to be in the hole at 10, 15, 25,000 while getting their business off the ground. But with leasing, you haven't spent the $25,000 in over 2.5 years. That's a huge deal. That's a huge deal. I mean, again, going back to the car dealership scenario, not many people go into the car dealership anymore and say, hey, okay, here's here's $30,000 for a car. You're either financing it through the bank or you're doing a lease option. We offer equipment financing and leasing programs. We have some great lenders here. Talking a little bit about them. You need to be in business at least for a year. Your credit score has to be around a 550. So these lenders they're very flexible in terms of what they can get you, and most likely with about a 550 score and you've been in business for a year, you can get a $10,000 equipment loan. You can get approved with even challenge credit, as we discussed. You won't need financials to secure the equipment or financing. Again, equipment financing and leasing is a secured loan, okay? With a secured loan, the equipment itself is actually the collateral. So if you default on payment, your equipment becomes the collateral for the lender. Approvals are quick. So if you call Credit Suite today and you are looking for equipment financing, we could have you approved within approximately 24 hours. You can be approved with equipment financing and leasing for as low as a 640 personal credit score. Now, that's changed a little bit. I talked to the lender the other day. They're now looking at about a 550 personal credit score. To get approved, the lenders will request details on the equipment that you're getting. Going back to slide number 2, you want to have a list put together. You want to have a full understanding of what your business needs are before going to the lender. You don't want to go to them, oh, I need a computer. Oh, I need this. I need that. You want to have an idea of what to go over with them and exactly what you're going to be leasing out up front. And then after a quick credit review, you can be approved for as much as $10,000 in the equipment financing, potentially even higher. We help business owners get financing to lease equipment. With equipment leasing, you receive more favorable terms than a typical business financing programs, even with more benefits. Whether you're a startup business or a well-established business, we have all types of clientele that come to us, ranging from a startup business to mom and pop type stores to $500,000 companies that come to us looking for equipment financing. We have hundreds of equipment lenders who would love to help you out. You can qualify with only 2 monthly payments as a down payment. Typically, when you're doing a collateral loan, it's like anything else. You're going to need the first payment and the last payment, and doc fees could range from a couple $100 all the way up to $1,000, depending on what the loan criteria are. Again, looking at the credit score, I wanted to pinpoint this out again because it is a little bit lower now, and that's kind of a huge. It's 90 points lower. You could get equipment financing for a 550 score. The rates are affordable and 100% of your interest is tax deductible. So take a look at your tax codes. I want to say that it's tax code 179, but it's absolutely, we have the ability to write off interest. Plus you can get approved for financing. So you get a 24-hour pre-approval, no upfront application fees, interest is tax deductible, and application to funding in 2 weeks or less. So you'll get a phone call back within the next 24 hours, but within 2 weeks, you should have the money to, the person who you're buying the equipment off should be funded. Purchase, lease, or borrow against any existing equipment as well. That's also an option. Heavy equipment is available, and loans again up to it just varies now with COVID, but those loans could range as high as $10 million. Get approved with average credit. The equipment serves as collateral. Financials are required. So to recap what we discussed today, business owners often having fluctuating revenue, meaning you could have a good month, you could have a bad month. With the past 6 months with the pandemic, businesses have been all over the board. Some are flourishing while others are flopping, and so it's these lenders are looking for trends in terms of how the businesses are operating when they're going to give out loans. But at the end of the day, you're still going to need equipment. And for new businesses, they need equipment to get going. There's no other question about that. But they can't afford it. Equipment financing and leasing can be the ideal solution. There are advantages and disadvantages to leasing equipment. Me personally, I believe my parents owned a restaurant a number of years ago, and leasing equipment upfront is absolutely 100% the way to go. You're preserving your capital while leasing out equipment at low interest rates and with the ability to buy it out at the end of the lease or upgrade to new equipment. So for me personally, I think it's a win-win solution. Just like any other form of lease versus purchase, Credit Suite offers equipment financing and leasing will help you navigate multiple dissimilar offers and make sense of it all. So the next step for us is let's get together. Easily and quick financing. You'll get every legitimate funding program in one place. You pay us no upfront fees ever. Credit Suite, the core of what we do is building business credit. With the leasing option, you're going to build business credit that way, but we can talk to you about financing. We can talk to you about building business credit. We can give you a free half-hour consultation with no fees. Use your own loan volume to get lower rates and fees. The business blueprint to graduate to SBA loans. Again, talking about building business credit and having the availability of business credit to give to an SBA loan it's critical now. And you'll never have to look for funding again. So I appreciate everyone's time today. Certainly, if you have any questions, do not hesitate to give us a call. We love to try to help you out and get some financing for your equipment or help you out building your business credit, whatever you may need. We'll certainly love to work with you. Please give us a call at 877-600-2487. My name is Scott Kurkowski, and I appreciate everyone's time today. Thank you.